What is good, Tesla family? It's Ray J back with another video, and in this one we're going to be talking about the one and only Tesla stock and what you should be looking after for the future. I'm also going to break down what's going on with the overall market, how this may affect Tesla, what the news, data, and technicals are telling us for both the markets and Tesla, and what my price prediction is for Tesla for tomorrow and the future going forward. Now, before I break anything down about this, before I get into any more details, I do have to mention a couple of things before starting. Firstly, I'm not a financial planner. Make sure you take none of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire Tesla community as a whole. And the last thing is, if you guys can, please check out the Moomoo link down below and in the description. If you sign up for Moomoo, the link down below, and deposit $100 into the account, you're guaranteed 7 free stocks, and any could be a free Tesla share. It's a limited time offer. The offer ends in just 2 weeks. Check it out before they run out. With that out of the way, let's get on with the video. So in my previous video, guys, I predicted that Tesla would likely see a bit of a pullback than a small bounce, but I thought Tesla would bounce a little bit more than how much it actually did. But looking at the chart, this is what Tesla essentially did. We gapped down into open, pushed up just a tiny bit. Then we saw Tesla just decline, decline. This is where the drop ended up coming. This is very similar and very close to the levels that I told you guys about. I thought Tesla could actually end up dropping to fill this gap, either like stopping at gap support or very close to it, or even coming all the way down to fill it. Then I told you guys Tesla would likely get a bounce after that. The only thing I was wrong about was where Tesla ended up bouncing to. I thought Tesla would bounce a little bit higher and actually push to like the low 180s or something like that. But we ended up actually holding like 180.45, down 1.53%. So Tesla being red is completely fine. We did need a bit of a pullback day. But overall, I do want to note to everyone that what happens to Tesla is actually going to be dependent on the news cycle and also the overall market. Tesla also has this gap way up here. I actually have it highlighted in blue. The gap is all the way up here around this like almost 188 area. I do believe Tesla will most likely end up filling this based off this overall setup. But we need to be prepared for anything just in case. I do think Tesla will try to fill this gap maybe tomorrow, maybe by Friday, hopefully. I'm hoping for more upside first before we do see the big like crash, the big pullback come. But I first want to talk about more context before I actually break down exactly why that is. So when it comes to the overall setups in the market, I want you all to know something, okay? The news could be very unpredictable sometimes, and sometimes unexpected things could happen. There's a lot of fear in the financial sector of the markets. Banking right now is actually becoming less and less predictable for a lot of people, and there is a high risk of contagion to happen. That's why I want to note to everyone that there is a possibility of us all just like straight up crashing from here. There's maybe like a 30 to 35% chance, not super, super high. And I think that the odds of, the whole market, including Tesla, just holding up or even squeezing even more from here is about 65%. So there's a much more likely chance the market's going to just try to keep going and try to hold up. I want to break down exactly why that is. For tomorrow, when you look at the overall market, we actually have not the best looking options chain. Tomorrow for SPY specifically, we have a $391 max pain with a 0.62 put to call ratio. So the majority of people actually have puts, so the market might actually not make that big of a move, but we do have a tendency of closing very close to max pain. For Friday, we have a very crazy day. We have a 1.92 put to call ratio. We're over 2% lower than where max pain is for Friday at $399. And we have over 3 million puts expiring on just Friday compared to about 1.7 million calls. So the majority of people are holding puts. It's actually closer to like 3.2 to 3.3 million. And people right now are betting that the market's going to crash this Friday. So the market makers are most likely going to try to cause the opposite and try to pump the markets. Once again, I know everyone needs to be prepared for anything just in case, but the odds do favor the market holding up or even squeezing by Friday, and this could even help Tesla in the process. Part of why this is because a lot of people, a lot of the sentiment driven by the news is about the crash coming, the crash is here, and a lot of people are just shorting extremely hard. When you look at the options chain, this is the biggest amount of expirations we have for the next couple of months, one of the biggest of the entire year. That's why quadruple witching is very important. People think the market's going to crash. Let's short the market so hard for Friday. Let's bet the market's going to crash. And it's very likely the direct opposite could end up happening, at least temporarily. This tells me that the quote unquote crash for the markets will most likely be delayed. Even though I am prepared for it, I just want you all to know it may be delayed for like next week, maybe the later weeks. Now, when it comes to the news, tomorrow we actually have some building permits data, some housing data, some data from the Fed affecting like the Fed prices paid and businesses. Nothing too major coming out except for initial jobless claims. Jobless claims is coming out an hour before the market opens, and the market is going to react to it. Now, we're expecting about 205,000 of the jobless claims. We want an increase in the numbers. We want this to be hot over and over again. Very recently, for the month of February, it's been pretty low. So we want to see this go up because the Fed is going to be de incentivized to tighten even more during a process like this. On top of that, we need there to be more unemployment, right? I know people that study economics talk about the Phillips curve. I know it's actually kind of outdated in a way, but there is massive truth behind it, right? We need unemployment to go up to bring down inflation. The Fed is trying to do that essentially, even if they don't want to say it. So it's going to take time, but we want more of these initial jobless claims. The market will improve when it comes to its performance in some ways. The market wants there to be more and more pain from the job sector. As far as Tesla goes, Tesla is going to be facing two class action lawsuits over the right to repair. Some people could say it's ridiculous or not. To me, it does not matter a whole lot. It's not going to affect Tesla too badly in terms of its share price. But both of these were filed in San Francisco, and also what's happening is many people claim that they're being forced to pay super competitive prices basically and suffer very, very long wait times. They're also saying that Tesla has monopolistic power and this and that. To me, I mean, is this serious? To some degree, sure, they are lawsuits, they are class action lawsuits. I don't think this is going to cause Tesla to just like tank or something like that, though. So I just wanted to note that that's really the biggest thing making up the news. We do have some negative news for the markets in some ways, and that's because of the fact that there is a higher risk of contagion as a lot of these banks are continuing to suffer over and over again. As the assets of the banks are losing value, it's going to lead to more pain from them, and they're going to need a lot more support on the side. So when people start losing faith in the banks and when there's a lot of stress on small banks, this is going to affect the US's GDP. This is why Goldman Sachs is cutting their forecast. This increases the odds of a recession. And you always have to remember the market almost never, I don't think it ever has bottomed before the recession starts. This is like a dictionary definition recession. You could argue we're already in one, but I'm just talking about this from economic terms, which is two consecutive negative GDP quarters. Now, when it comes to the Swiss National Bank, they're saying that they're going to provide Credit Suisse with liquidity if it's necessary. So now Credit Suisse looks like it's going to fall as well. So more and more banks are just continuing to fall, and more of these investors and businesses may capitulate. They might actually start to see a massive bank run. There is a higher risk of this as day goes on. Now, I don't want to guarantee that this is going to happen like as soon as this week. It may actually happen closer to like next week or later on. And I do believe this is going to be a situation that continues to get worse. That's why the next FOMC meeting going into next week is going to be very important. Now, why did the market actually drop the way it did? We actually got a good PPI report that ended up coming out. It ended up being even lower than I expected. So PPI is just a producer price index for businesses. Year over year was 4.6% lower than the consensus of 5.4%. Core was only 4.4%, which is actually quite lower than the consensus of 5.2%. So overall, once again, we're getting some signals that are good for the economy in a way that inflation is starting to actually slow down, at least as of right now. Could this thing actually uptick for the month of like June or going into summer? Yes, it can, but we're not there yet. And as of right now, there is some improvement. So the odds of the Fed giving us like 50 basis points for the rate hike is going down. And I think that 25 basis points seems a lot more likely because inflation is still high. It's still well above the Fed's 2% target, but the Fed may not have to be, or they shouldn't be as aggressive because the banks are already starting to collapse and the pain may incentivize them to just not be as hawkish. I do think they will tighten, just uh, not as strongly as before. Once again, it all depends on FOMC. Now, when it comes to Tesla, the inventory levels are relatively low again. This is a good sign because there is still high demand for Teslas, despite the fact that the used car market and the demand for cars in general is starting to drop a bit. I believe that this is like, excuse me, sorry guys, this is most likely going to continue as time goes on. As long as these Teslas continue to be like bought up, I consider that good news for Tesla, and we do have a good possibility of some strong earnings. Tesla had 145 million in volume, relatively low volume, and we dropped off low volume. That tells me that when the market collectively gets more volume and more buying pressure does end up coming, this could help Tesla's share price actually turn green easier. So we're only down under 2% for the day, not too bad. And I do believe that Tesla could actually try to continue to push. There's a downtrend in the short volume right here. This tells me that the shorting and the short volume making up Tesla's overall volume is declining. It's actually losing power. The last time it came out, it was only like 52%. That was just for today. So it's very, very close. It's almost 50-50, which tells me those who are buying into Tesla, shorts covering and other factors are still making up a lot of its volume. And that could actually help the share price too get closer to filling the gaps above. Tesla's price pairs ratio for today is once again in the upside direction, meaning that Tesla is not heavily underperforming. It did underperform compared to NASDAQ to some degree, but overall, it wasn't necessarily too bad. It's just a very healthy pullback of a day. And I do believe there is still some potential for it. There is still some room. Wolf Research, actually, this is a big analyst. They actually downgraded their target on Tesla. They no longer think it's going to be outperforming the market. That's part of why Tesla did underperform a bit, not to mention, new pieces of news, the lawsuit and things like that. But this news usually subsides after one day. Now, as long as there is not way more bad news affecting the banks and etc., there's a good chance that Tesla and the market could continue to try to hold or even keep going. Tesla's only green 47% of the time on Thursdays. Please remember that. That could affect us for tomorrow a bit, but the overall short interest is not necessarily increasing too much. It's actually declining a bit. So the shorts are not like piling in just yet for Tesla. They're not trying to smack it down too hard. I do believe they're waiting and they're lingering at the higher values when Tesla gets most likely to like the high 180s, maybe 190. That's when we're most likely going to see them. So what is the chart telling me? What are we seeing from these charts? I first want to talk about SPY. SPY is a little bit harder to predict right now. I want to note that we didn't finish filling this gap, so we might see the market push up in the very beginning of the day, but then I do anticipate a bit of a pullback as the day goes on, so we might see SPY slow down a bit. Then we're most likely going to see a bounce near the end of the day, and we might see SPY close very flat, maybe somewhat in the green. Now, as long as we get a decent close for tomorrow, we're going to be in a good place for Friday, and those market makers might try to squeeze the shorts. It's very likely. There's a high probability of that happening. I'm not promising it. Once again, anything could happen regarding the whole like bank situation, etc. But like I said before, there's a high probability of that happening and SPY continuing to push into like the 390s. I also want to note that we have resistance around 391, so watch that very carefully. But I do believe we're going to get a pump into the open, maybe a bit of a pullback, and then we might continue to pump by the end of the day, just like today. If you guys weren't watching the market, today was pretty insane. What I predicted was a bit of a gap down, then a bit of a drop in the market. We did see a drop, then we got a really nice bounce. And at the end of the day, the market makers came in hard, and look at how they pumped the market at the very end. They're trying to push the market up. It's part of their intent. For NVIDIA, same thing. This thing did get pumped at the end. It has lots of strength right now. I believe that this thing might try to retest this 144 area very, very soon. It might reject off that. Then it might actually reverse and close somewhat in the green again. If we could break this, then I wouldn't be surprised if 250 comes later on. It is still very possible. Just be very careful. Neo is looking relatively weak compared to the market. It could push up temporarily, try to fill this gap, but it has a lot of resistance in the mid 8s. If that fails, I am seeing more downside for Neo. It has, once again, less strength. Apple is looking pretty strong. I actually like how Apple's looking. Very strong close for Apple. This thing actually jumped from 151.8 all the way up to almost 153. So huge push at the end of the day thanks to the imbalance in order flow. And I also believe that Apple has the potential. I don't know if it's going to push up first. It might push up in the morning, then pull back a bit. But eventually, I see Apple hitting the 155 to almost 156 zone pretty soon. I think maybe by Friday, Apple hits the 155. And I do believe, once again, shorts will get squeezed because of this, as Apple's going to drag up the QQQ and also SPY to some degree. Finally, for the triple Q, this thing had a nice close, very strong push up. We have some major resistance between very close to about 300, around that area. If we could break it, this thing could actually keep going to about 304, I believe, around 304 or so. Uh, we have to break between 300 and 301 first. It's going to be some major resistance. So I do think the triple Q is going to push for it. We might get rejected off 300 to 301, come back down to the very high 290s, but then we might continue to keep going because overall the trend is still more in favor of the bulls. When you look at the hourly time frame, it's showing us the same thing. Overall, the MACD is still open on the hourly. It could try to push up and get a somewhat green day tomorrow. This once again could actually help the market in Tesla. And for the SPY hourly, I just want to note that SPY is less it's not as strong as the triple Q as of right now. Might push up to fill the gap, get rejected, and we might still close somewhat green. But Friday is going to be very interesting. There's a good chance SPY might see a squeeze, right? There's a good chance because SPY is shorted more than the QQQ for Friday. That's very, very possible. Now, the VIX, I want to note something about the VIX. The VIX has almost like a double top like formation. See how we hit this 30 like two times and we got rejected very close to it. It looks like it's a little bit overextended. And when the VIX tends to move over 10% in one day, we tend to see this thing slow down a little bit afterwards. So there's a good chance the VIX might actually pull back very soon, all the way back to 22.64. Maybe to about 23 or so. And this could be because the market might pump a bit. It is very possible that the market could cause that to happen to the VIX, which is a bullish signal. Finally, for the dollar index, I think I just lost it. But on the dollar, what I'm essentially seeing is something else that's very similar. On the hourly time frame, the dollar has a tightening MACD. It's losing some strength, and it looks to me like it might pull back a bit to about 104.28. I think was the level, very close to the very high 103s. If it does pull back a bit, this could be bullish for the market as we approach like Friday. Now, for Tesla, let me find my Tesla chart. What's going on with Tesla? Well, Tesla had a very healthy pullback. It's only down like 1.5%, nothing too serious. My prediction was Tesla would get a pullback. We did get the pullback. My target was we might fill this gap to the downside or get stopped around like gap support somewhere around there. It came very close to it. But I told you that later on Tesla should bounce. We did get a bounce, but it wasn't as big as I thought. I was hoping Tesla would close a little bit higher than 180, like around 183 at least, maybe get a little closer to filling the gap. Instead, we closed around 180, which is still a good close overall. We did hold 180. What I'm essentially seeing is some very important levels you have to know. So if you're bearish for the markets, if there's some really bad news, for Tesla, please remember that if Tesla breaks below 176, there's a gap all the way down to 174. If that doesn't hold, the next major support is going to be around, there is some support at 173, but I'm going to be watching 170 flat. Just want to note those levels, especially the low from today. If that doesn't hold, hypothetically, I just want to go over the possibility. There is that gap below. Just be prepared just in case something like that happens. Now, if you're bullish on Tesla, you have to watch for, first off, it needs to keep pushing. It has to break above this 183.25 level, then maybe around the very, very high 183s. If it could break the high it made yesterday, if it could break the highs from Tuesday, there's a good chance that Tesla might be able to actually fill this gap and get to about 188 to 190. We could see Tesla try to get to almost 190 or the very high 180s. It's very possible if we could break this like 184 level. I think it's very, very likely. Now, Tesla did close above this major resistance trend line, so that's another good sign. But I'm prepared for anything just in case. Now, for my prediction, I want you all to know that you need to be prepared for anything. Be prepared for anything just in case. Okay? Watch support and resistance levels very carefully. The news can be very unpredictable during times like this. As I mentioned earlier, there's always the possibility of a crash. I do believe the market will crash, but I think it's going to come later, after this week, maybe going into next week and a lot later. I think it's most likely going to take some time. Could we crash from here? It's a possibility if we get some very bad news, but I'm saying there's maybe like a 30% chance of that happening or something like that. I'm thinking that it's very likely the market's going to hold or continue to squeeze. There's probably a 65 to 70% chance of that happening, in my opinion, for this week. which tells me that Tesla will most likely fill this gap and try to get to the high 180s. It's very likely that that's going to happen. The only reason why I'm saying that is because I want you guys to be prepared for anything. All right, make sure you're very, very careful because, like I said before, what's happening to the banks is very similar to things that happened in 2008. But before the crash comes, I do think the market's going to try to hold. My prediction for tomorrow, now that you're prepared for anything just in case, I would say that Tesla might get a push up in the morning, right? Just as the market is still going to get ready to fill its gaps, Tesla might get stopped around this almost 184 level, somewhere around there. Then it's going to likely get a rejection and a pullback. When Tesla pulls back, it might retest this trend line, get to the very high 170s to 180 or so. I'm hoping it holds this. If it could hold this and get a really nice bounce off the back test, it could keep going and actually close somewhere in the green, very close to gap resistance, or even fill the gap to the very high 180s. I do believe Tesla's going to get a somewhat green close tomorrow. I think the market has the potential to do so. And that's essentially what I'm predicting. I think Tesla's going to try to close somewhat in the green around the 184, 185 level once again for a nice green day. And if the market does manage to hold up very nicely, we do have a very, very strong setup for a potential short squeeze for Friday. For shorts to get squeezed, for Apple to push up very hard, for SPY to also push up. And this could be the final big push up for the market before the big crash starts. All right. So Tesla might hit 187 to 190, around this 190 zone. I could see Tesla fly all the way up there to almost 190. But once again, there are going to be lots of shorts lingering up here. The short interest on Tesla has been declining. It's not super, super high just yet. I believe a lot of shorts will pile in and they're just waiting for the big entries. So just be ready. Be ready for a top somewhere around the high 180s to 190. I do believe it's very possible by Friday, hopefully. And once again, always be prepared for anything just in case. Take nothing I say as financial advice, and I'll most definitely see you guys in the next one. Tesla to the moon because the long-term future is still incredibly bright, and peace out.